What's up, everybody? This is the Trading Nomadic Show, and we are back once again. I've got a few charts. I'm kind of excited to go over with you guys this week. Let me get in the chat room here before I forget again. And one of those, I'm going to cover the normal ones we usually go over, but I want to bring up gold and silver. I've got gold up now. This is GLD. And while both gold and silver, I'm on a weekly chart now, and you can see gold has been, we're looking back here to about 2012, where it initially broke this neckline here. This is resistance that we had broken above, chopped around a little bit, came back to retest it. Got that sympathy run after that, and it just, all the way down from, this is February 2013, took a real big tumble down here to about 117. And you can see we've got this rounding bottom accumulation that has been taking place from about July of 2013 all the way till May of 2019, and it's been on quite the run since then. But what I am pointing out here is, we do have that run up that peaked around, I think that was last August, right? And you could see the price actions come down since. We came back down and retested that neckline that was resistance and support from back in 2012. And after springing above it, we've come back and we've retested that once again as support now, which puts gold in a really, really great place for a possible run up. And it's not just the chart so much that's got me interested in this play, but we've got this double bottom here that was put in early March, and with the rising talks of inflation and everything else going on, the money printers going, printing free money, the dollar is being debased. So Bitcoin has been one that we've talked about. Gold and silver now are starting to get a lot of attention. Again, it's an anti-inflationary hedge. A lot of people are looking at it like that. And I did bring this up, I believe, a couple weeks ago. But as you could see, once we got that double bottom confirmation that resistance is now support, it's been on a run again. And I've got this first target here at 186. I would expect to give that a retest in the near future here. Gold isn't necessarily the fastest mover, but I got a feeling once it gets going, we're going to see some of these higher prices pretty quick here. Yeah, I would probably first look at this 180 zone. It looks like we've got a little bit of chop down here where we're at right now. So this could be an area that we do hit resistance, come back down and maybe retest 166 as support. So that's one I think we should keep an eye on. Obviously, it's a little bit off the entry, but again, if we come back down, test that 166, 168 area as support now, that would give traders another entry to ride it up with an easy to manage reward to risk. Easy place. You could set stop losses right underneath that swing low here, just under 166 to stop out, and you could catch a momentum play off of that. And again, I do think we're going to be giving that 186 region another test pretty soon here. Silver as well, same thing. I'm gonna bounce out to a weekly chart on silver, so you kind of get the full picture of why this particular zone is real important. On silver, same thing. Back around 2012, we fell off of this support, this neckline here that I've got marked out in red. And this is SLV, by the way. It's the iShares Silver Trust. But you could see, same thing, March of last year, COVID. You've got this huge impulse up that peaked in August during the summertime. We did come back down a little bit, and we've been consolidating in this wedge here, which is putting us once again back above that critical ice line from 2012 and 2013. So, I would expect probably same thing that I was talking about with gold. We'll probably come back down and retest this as support. Arguably, we've kind of done that already with this lower area here at 22. We got that initial impulse up, came back down, and we have back tested the spring, sprung above that area once again, came back down, and we're making higher lows every time. Higher highs, higher lows in this consolidation structure. And again, we're above a critical ice line that is, very important to the history of this asset. And yeah, I do believe, considering, the environment in the market right now, with inflation talks, with the money printing going on, the debasing of the currency, these are both going to be assets that are looked at to hedge against inflation. And that does bring us to Bitcoin next, which again is, a lot of people look at Bitcoin now as a digital version of gold, as a hedge against inflation. And we almost got a nice breakout here on Bitcoin a couple days ago, where it did peak in this 59,000 area again. I was watching this one specifically, this high back here in February 20th, that 57, 58 neckline here. We did get above that, but it did get a rejection at the top of this channel. We're now forming this consolidation structure coming off of the initial spring here. So you can see we made it all the way down to about 53 and a half, but not for long. You can see, I zoom in a little bit here. You could see, this is all wick down here. It's the same thing that happened last time we got rejected on the 3rd of May. It came down, but it doesn't last. That supply, this demand line down here, the supply is just, it's being absorbed so quickly. Hey, palladium as well, man. I've been watching the futures market for a lot of this stuff. Commodities of all kind, precious metals, everything's going through the roof. Lumber, corn, cocoa, sugar, you name it, everything's just going absolutely ballistic, and it's just been going wild. And Bitcoin's going to be another one of those. I think, like I said last week, I do think once we do get over this congestion zone, you can see every time we test this zone, we've gotten above it a couple times. We have gotten as high as, just about $65,000, but there's just not enough demand at those levels. And I think part of that's probably tied into, the altcoin craze that's going on. All the different, hyped up coins and assets that everybody's chasing. When you take money in this market specifically away from Bitcoin, I'm not saying that's the cause of any of this, but it's all stuff that factors in. And when a lot of those altcoins are valued against Bitcoin, the more money that's going into the altcoins, it takes away from Bitcoin's dominance in the market. And you can see it's not a lot of demand for it up here. you can see the volume has slowed way down once we broke in this area. But again, Bitcoin is an asset with a limited supply that is dwindling at an extremely fast pace. With all the institutional investing, with these larger corporations putting it on their balance sheet, it's a matter of time. This huge accumulation consolidation structure. You can see we continue, even with the ups and downs, we are continuing to make these higher lows time and time again, and it's no different on this last correction down from the 9th. Every time it makes these wild moves to the downside, it's being absorbed. It's being bought up so fast that we're not putting any candle closes in these areas. And that tells you that there is a lot of demand for this asset. And again, if we keep making higher lows, higher highs, we're gonna see an eventual markup. All these big corporations, banks, etc. I wouldn't look at Bitcoin like monopoly money, but a fun fact about monopoly money is monopoly money from the 20s is actually worth more than our current currency now. You could take $50 of monopoly money from the 20s and it's worth more than $50 of US dollars. Fun fact. But all the same, Bitcoin, it likes to do this stuff when everybody least expects it. Every time everybody gets hyped up about, these breaks of this critical area here, we've been faked out a couple times. But I've been looking at this pattern here on Bitcoin specifically, and I called it out the other day, but apparently it was a little premature. Whoops. We've got this 3 rising valley pattern going on here. You keep getting these valleys, you get the spring up, you come back down, test a higher low, spring up, come back down and test a higher low. And the rule of threes in trading leads me to believe that we could see a pretty big price markup soon here. I'm still looking at the same type of targets. This neckline up here between 66 and 68,000 initially, and I've got this little magical number that I came up with a couple months ago now, 71,820. But once we get above these levels, it's price discovery for Bitcoin. It's gonna be marked up until nobody's buying it. That's how it goes. The composite operator has been acquiring his position for quite some time here. There's been a lot of opportunity for institutions and big money and corporations, yada yada, you name it, to acquire their positions. And a lot of this could be in a respect, manipulation to keep this price down, to keep it down here as long as they can, to acquire their position before it gets marked up. Because obviously you want to get an asset as cheap as you can, so you could distribute it at higher prices. Bitcoin always affects the rest of the market because everything the same way that the stock market's valued. You could see the correlation between SPY, the US dollar. It's all valued against that, and it's the same with Bitcoin specifically. All the altcoins are valued with Bitcoin. So when Bitcoin goes up, when Bitcoin comes down, the altcoins all bleed out, specifically when Bitcoin goes down. And that's what happened on the 9th when Bitcoin took this tumble after getting rejected up here around 58, 59. I think it was about 59 and a half. All the altcoins followed. They all bled out, but from a trader's standpoint, that's actually, that could be a really good thing as long as you know how to protect your capital when you do get them pulls to the downside, especially with the altcoins. If you've got cash set aside, that opens you up for some really, really good opportunities. And that's what I've been doing all day, is looking for those opportunities, because you'll get structures like this, these bullish harmonic structures. They form after, you know, a large retracement, and that gives traders an opportunity to take long positions. And on something like this, you'd want to take a position down here at D with a stop loss underneath it in case the structure is invalidated. But I would keep an eye out. I know Bitcoin's been fairly boring for the last couple months, especially with all these altcoins running wild and making new highs. One of which that stole the show. We've been watching, and essentially this is something you could see when Bitcoin finally gains traction. We've been watching YFI here for a while, and same type of idea. You know, you get these peaks, you get the impulse up, you come back down, you're making lows, but every time you make a new low, it's a higher low, over and over. And this one hasn't been moving like crazy for a while, but it finally caught its wind here, and it went from, I mean, we're talking around $50,000 all the way up to, I think it peaked at 81,500 today. That's crypto. I mean, that's the crazy world that we live in when it comes to crypto. It's up 63% as of from yesterday. I believe that was yesterday. Yeah, that was yesterday. 50,000 to 81 and a half in a day, 60%. And it's not that far-fetched to see something like this from Bitcoin. You know, a lot of these numbers being thrown around, Daryl, like, yeah, $2,000 or $200,000 for Bitcoin. I mean, some people brought up numbers way higher than that, but this is how it happens. You know, it's short squeeze type stuff. You know, when you've got leverage traders, and essentially the same way that it comes down so aggressively is the same way it's going to go up. You know, once the demand is greater than the supply, once the supply is absorbed, you're in price discovery. And once you're in a price discovery market, it's just going to keep going until the demand stops. So, I mean, that's pretty exciting. It's been a boring asset for a while, especially with all the hype around the altcoins lately, but it's going to have its time to shine, in my opinion. As far as my top 5 and 10 coins go, it's not my favorite at the moment, but Bitcoin's one that, you know, I've got the most trust in. It's a lot stabler than a lot of the other coins, but I'm a trader, so I go where the money is. And a lot of the altcoins have been, if we talked about it last week, but a lot of the original altcoins back from the bull market in 2017, you know, they had lost so much value during the bear market over the last couple of years. They're all starting to gain traction based on their BTC pairs. One of which we've talked about is Litecoin. This one still has a way to go, in my opinion. You know, a lot of my favorite coins recently have already been marked up so much that, I mean, there's a lot better opportunities out there right now. Like ETH was one of the ones I've been watching for a while. Ethereum, because of the BTC pairs, and I'm looking at the LTC BTC pairs. And this is, where's 2017? This is some of the highs from 2017. A lot of these other altcoins that have been marked down, like Litecoin here, I mean, we're down here. the next major level of resistance on Litecoin, you know, if it gains traction like ETC, like ETH, like EOS, a lot of those coins, this is why. This is where these crazy runs have been coming from, because the BTC pairs have been testing old levels. While BTC, Bitcoin is valued a lot higher now. So when they test these historical levels, like Litecoin is on the way to do, I mean, it's started already. I'm not even going to throw out numbers for where Litecoin could end up, because it's not going to sound very rational. But anyone who's been sleeping on Litecoin, I would recommend paying attention, because this is where we're at. And just to get to that next major level of resistance on Litecoin, I mean, we're still looking at about 135% up to this zone. I'm not saying for sure that Litecoin is going to test those levels, but that's what's been happening, and it's across the market. Litecoin, US dollars right now, Litecoin is sitting at about 370. I think the next major resistance I'm looking at for Litecoin, before potentially it really gets out of control, is probably going to be probably 420. If you see Litecoin break this last high we put in here on the 9th, before Bitcoin crashed, well, not crashed, before Bitcoin corrected, at about 413, if we break this again, if we come up, get a nice impulse above that, come back down and retest as support, that's when you're really going to see Litecoin just take off. It's not going to make sense. You know, everyone's going to be chasing it, and that's where you get that you get that wild price swing. And like I said, this 413, 420 zone, if we break this area, you're going to see the same thing happen that happened to Ethereum, that happened to EOS, that happened to Ethereum Classic, you know, ETH as an example. We identified, all right, so this last consolidation zone down here between April 15th and April 25th, if you look at the Ethereum Bitcoin pairs, this is what we were looking at on the other chart. This zone right here is where it was consolidating, right? And you're wondering, what is this big red neckline I'm looking at? Well, on the Bitcoin pair on Ethereum, look what this level is. 2017 in March, that was resistance. In 2017 in March, what happened when we broke above that resistance? Straight up, straight down. So again, it's not a prediction. I'm not saying it's going to happen, but Ethereum very well from this point to our next major resistance, you got another 20% on Ethereum. If we tested the next level up from that, that's another 50%. If it went back to retest its all-time highs on the Bitcoin pair with Ethereum, you're talking another 89%. And look at this. Just let that sink in, because this is more than likely, you know, in my opinion, it's not trading advice, but more than likely, this is what's going to happen if we look at Litecoin. I meant to bring up the BTC pair. If you look at Litecoin, it's the same thing. What happened last time back in 2017 in March when we broke this resistance. It went straight up, all the way up to, what's that, 1/50th of a Bitcoin. And that level, if say Litecoin does the same thing that Ethereum Classic, and the other ones have been doing, I mean, you're looking at a 200% gain on Litecoin, even this next level up here, which historically, looking left, where would it make sense for this price to go and test next? Well, historically, that's the first place this price action is correlated to. Straight up, straight to here, straight up, straight to there. Over here, same thing. And that's important when you're looking at price targets, because you want to know, historically how this asset performs in correlation to the different zones, right? You can. I always, I've got my Fibonacci targets, but historically it's a straight move from where we're at now to the next zone up, which is 133%. So if we're sitting at about $400 for Litecoin, 100% of that could potentially put us up. And it sounds crazy. It's crypto. It doesn't have to make sense, seemingly. That would put us at about an $800 Litecoin. And everyone's gonna, that's wild. No one's gonna pay $800 for Litecoin, but here we are. So that's, as far as my favorite coins right now, that's what I've been looking at. I've been looking at those type of plays. Some of these old legacy coins that they're playing catch up. They're retesting the old levels from 2017, from the last bull run. And I got a feeling, especially once we see Bitcoin really take off, that's going to be the antagonist to make all these assets go test them levels. Because as Bitcoin's going up, well, the value of the Litecoin to Bitcoin pairs is going to go up. Price action correlation, it works like that. So it wouldn't be a bad idea to take some positions. Obviously, you want a trader's edge before just, YOLOing into some of these positions. But yeah, ETC, I mean, that one's, I'm not saying that run is over, because ETC probably has some higher levels in the future, especially once Bitcoin gets going. But Litecoin is there's probably a lot more juice in Litecoin than there would be in EOS. I think the highs for EOS is going to, before price discovery, I think it would be retesting, if I got this right here, EOS is probably looking at about $15. Just using Fibonacci, but I believe 15 is also historically, if we pull up, historically, EOS is probably, just more than likely going to come up and test 1240 again, and then ultimately 1568, at least on Binance. That's the highest level on EOS. But I had Doge pulled up. This is one, again, I'm keeping an eye on. I know it's the meme coin. They do have, Doge did have the news come out with Doge being the currency used to fund a SpaceX mission next year, 2022. And it did get a little bit of action from that news. But I have seen tweets from Elon Musk. I think it was today. Now he's asking if people want to be able to use, Doge for Tesla purchases, and Cardano, VeChain, Chainlink. I'm going to run through those real quick after Doge here for you. I'll do as many as I can. If I don't get to any of those, I'm on Twitter at Trade Nomadic. If you guys want to give me a shout, shoot me a message. I can pull up some charts for all of those. I do have charts for all of those ongoing. But Doge here, we broke up to this 69, as high as 73, and we got this big sell-off after Saturday Night Live. But the sell-off made sense because when this asset broke this old resistance from this last zone back in April, it never retested that resistance as support. So we came up, tried to break that 69.73 area up here, and it sold off. But what did it do in the process? It came back down to these levels and retested what was once resistance as support. And in the process, it formed this butterfly harmonic. And we've got that initial impulse up, which you want to see when you form a harmonic like this. You want to see that initial reaction up. And what did it do? It came back down to confirm this area as new support. And now we've sprung off that a little bit. And, as long as Bitcoin plays ball, I think we're going to come back up here. We're going to test these levels once again. Up here at 69 and 73. Nobody knows if it's going to break those levels, but if we test it again, we're still making higher lows here on Doge, which implies more market participants own this asset. Higher lows means accumulation. And especially with some of the news coming out, who knows, if Tesla announces that they're going to accept Doge as a form of payment for Tesla products, that could be the antagonist that drives this asset up higher. What was the next one? Cardano. Cardano is one that's been running already, but I do have some targets on Cardano here. I'll pull it into a smaller time frame. So I called this initially out down here that we were possibly forming this bat harmonic, which at the D point would retrace. And mind you, I had these arrows and all this stuff here before it even happened. It's how harmonics work. It's all Fibonacci retracements and levels. But we did break up. We got this massive run up after we confirmed support down here. Sorry if this chart's a little bit raggedy right now. But we have formed another harmonic. And when Bitcoin sold off, it put in this pattern completion zone down here, retesting old resistance as support. And that's what you want to see. That's where I got in again into Cardano. And we do have the top of the zone right now at about 180, 183. But just looking at this chart, I would think we're probably going to come back down to 171 if we haven't already. It's hard to see here. And just, you got the spring, and then you back test the spring, and then, this, you could even look at this like a bull pull, bull flag. You got the pull, you got the flag, and then you're going to, one more impulse up would complete that pattern, which would bring us, if we were looking for a price target here on ADA, just looking at Fibonacci, a lot of the times crypto is going to want to retest the 1618, which is $2. If you were looking at the bull pull, probably looking at, off of this pattern, if it's validated, would bring us up to about 191, which again would break this resistance. So you might see us hit 191, come back down, retest resistance as support, and then continue up. Again, I think this would be all-time highs for Cardano, if I remember right. That I might be wrong there. No, I think that is all-time highs, at least on the Binance chart. So that's what I would expect out of Cardano. Once we break this neckline, if and when we break this neckline, come back down, retest it, and then that's probably when you would see $2. but it's crypto. We could break this neckline and the bulls could just come running from all corners, trying to get a piece of this asset as the composite operator marks it up. What was the other one? Cardano, VeChain doing things. I have not updated my chart for VeChain. I posted this one back mid-April, formed this nice harmonic back here, and we've just continually been making higher lows. Even with Bitcoin selling off, we still manage to make this higher low. And I'm just going to go out on a limb here and kind of looks like we got I kind of got the same thing going. You got this harmonic structure here. This would be the pattern completion zone. You know, the oscillators on, I'm on the 1 hour chart. Yeah, on the 4 hour chart, you kind of got a nice argument here for VeChain once again. You know, you got that price markup, the consolidation here, and then the same thing. It formed this bullish butterfly, and that would be your pattern completion zone. And we've got the reaction that's been running ever since it put in that low. What was it, last night, yesterday, about 8 p.m. And if we look down here on the MACD, you've got hidden bullish divergence, because you got the price action from this point to this point, making higher highs or higher lows, I'm sorry. And then you've got the MACD, which was actually making lower histogram levels. So that implies at this point a continuation of the bullish trend. And on this harmonic, I would look at A and C, about 24, 25 cents as a first target. But ultimately, I think we're going to come back up here and test this resistance from mid-April once again. And if you break above that, maybe 35 cents at the 1618. But again, if Bitcoin really takes off, all these assets, they're just gonna make stupid moves. You know, traditional technical analysis in crypto will take you to logical numbers. It's never going to take you to where some of these assets actually end up. My trade strategy when it comes to targeting stuff like this, you know, I'll take the majority of my profit out from a trade setup, and I'll leave, you know, whether it's a quarter of it, you know, 20%, I'll leave something in there with a trailing stop loss. Just let it go, you know, let it do its thing. And it, you know, it ends up paying off in the end. Sometimes you lose a couple bucks that you could have gained if you hit them targets and it just retraces right away. The trailing stop will take you down a little bit, but you know, it's an odds game. And with crypto, the odds a lot of the times, once you break historical resistance or critical ice lines on these assets, they just go nuts. You get a lot of demand, not enough supply, and that's where price discovery comes into play. What was the next one? Chainlink. That's another one we've been accumulating. The end of April here, about mid-April, it had that sell-off. It came back down, formed this nice rounding bottom until, same thing, got up to the neckline again of this structure and the demand for this asset. You could look at this volume, it just went nuts. And again, after springing above old resistance, came back down and we retested that old resistance as support. And price targets for Cardano, or I'm sorry, Chainlink, you know, just looking at the target of this structure the Fibonacci retracement at the 1618 would bring you to about $52. Further than that, the 100% measured move of this structure would put you at about 57. And like I said, once you get going, price discovery, once we break back above this 5270 area, these are just Fibonacci targets. It's hard to really put a number on some of these assets when they really get going, especially with Bitcoin priming up like it is. It's anyone's guess. Same thing that I plan on doing with this asset. I've got a little bag. I put a trailing stop on there, comfortable, to just let it find its way, as I like to put it. I don't stake Cardano. I do own a nice bag of Cardano. It's one of those assets that you got a lot of people that support it. It's doing a lot of things, and in crypto, some of these assets that are being marked up aren't doing anything. Cardano actually has, I'm sorry, I'm looking at Link, but talking about Cardano. Cardano has a lot going for it. The stuff they're doing in Africa, and it's hard to say where it's going to end up by the end of the year. And I do think the bull run has a ways to go, and it's going to be an exciting ride. That's my belief, at least. Some of the people in my Discord do stake Cardano as a lot of these other assets as well. It's not something I've really gotten into. I'm a trader more so. I like having the capital and everything at my disposal when I need it to take trades like this. But it's something that I have thought about, especially with the growing interest in this market, the growing adoption, all that stuff. There's guys in my Discord that have done really well, especially in the DeFi environment. Pancake Swap, Uniswap, Sushi. A lot of there's money to be made all over the market, and I'm just trying to get my piece of it. What was the other one? I'm having a brain fart. XRP, Jordan. I'm sorry, I forgot that one here for you. XRP. This is another one. I've been playing all these moves on XRP as we've been getting them. And the way I'm looking at this one here is I was looking back here, again, the end of April. We put in this inverse head and shoulders pattern. We broke above old resistance at about 150. And I was waiting. I thought XRP was really going to start marking up. Again, it's the same idea that I was talking about earlier. XRP has some much higher levels historically that I think we're going to end up retesting more than likely when Bitcoin gains its feet back. Same thing. It's I think the XRP pair. If we look at XRP on one of these exchanges that has some of the older data, right? This is your monthly chart. I'll pull up the weekly. This is your weekly chart on XRP, right? Just throwing this out there. Some of the levels on XRP that I would expect us to retest if it really got its footing. And if you look at this structure that XRP is forming, I mean, this is accumulation from back here in June of 2019. It's been going on for, just about 2 years now. And we're finally getting the markup. And this is what initially got me back on the XRP train. With all the stuff they were going through with the SEC and all that, I wasn't in XRP for a while, but now that we've broken these old levels, it's wide open space. Our next major level up, if I'm just looking left, some history here, XRP very well could have, 183% up to this next zone, even if we were being, we've got this candle wick low here, candle close back here. Even that level, if we tested, you got another 50% just up to that level. If we were looking at the candle wick from 2017, that's 180%. And then again, there's not much. If you look at the historical price action correlation, it's just straight up. There's not a lot of chop going on here on XRP. You've got this little consolidation zone here, but even that zone from where we're at now is about 100%. So if we're looking at XRP compared to the US dollar, 100% from where we're at, you're looking at about a $3 XRP. And if you saw the chart, if we continue to test some of those higher levels, this asset could appreciate to levels that are just going to seem ridiculous if I mention them right now. I'm not going to throw out targets for that stuff, but I would not be surprised. The measured move of this structure here, just your high to low, would bring you up to about 284. The 1618 retracement of this leg down would bring you to about 250. And we're sitting at just under 150 right now. And those would be targets that I would take profits at. Same idea. Once we break this, I'll take profits at those levels, but at the same time, I'm going to leave, whether it's 25%, 20%, whatever it is. I'll leave a little bit in here to just let it, if it wants to go nuts, if it wants to make ridiculous highs, I'm here for it. I do enjoy using trailing stops for that type of stuff because it does give you the opportunity. There's been a million times where I used traditional technical analysis for my targets, and then Ethereum Classic for one. If we look at Ethereum Classic, I had a trade set up in my Discord down here because Composite Operator left his signature. You got that huge impulse up, and I think we had one back here. Early April, when this stuff, same reason Ethereum Classic was doing the same thing with the BTC pairs. But we had this accumulation rounding bottom structure here. And once it broke that neckline, you went from $35, traditional technical analysis would have brought you, even traditional crypto technical analysis, this 1618 is a common retrace I like to look at, would have brought you to 65. And where did that asset end up? $180 before retracing. And ETC is another one that kind of gotten back into a new zone, starting to accumulate. You got this harmonic structure that would give us targets of about 126, 134. But yeah, it's looking at those BTC pairs, man, will give you a nice edge, especially if you're seeing the US dollar pairs start to appreciate. If you see, patterns or trends developing on the US dollar pair, take a look at the BTC pair, man. It'll really give you an idea of what's going on. And bigger pullbacks. That's on the pullbacks, man. It's the best time to take positions, even if if you're not sure if we're going to get a bigger pullback on Bitcoin, which we could. I mean, Bitcoin could very well come back down and test the bottom of this channel again, which is ultimately going to drive the altcoin prices down with it. a lot of the times what I'll do is, if you've got an altcoin developing harmonics or patterns, or, and I'm thinking about taking a trade on it, what I'd like to do is sometimes I'll start my trade, I'll put my targets in, I'll have all this stuff done ahead of time. And then, if we do end up sliding down further, what I'll do is, like you said, I'll average in, I'll dollar cost average. I don't always do that, but on assets, like if we were talking about XRP or EOS or Ethereum, Bitcoin, all of those, I do expect them to continue to appreciate, in the long run, and especially this year. So I just start my position and I leave a little bit on the sidelines just to add into it. Ultimately, if I've got a high conviction that they're going to be appreciating in midterm, long term, that's stuff that I'll just add to. And you got to find out what works for you. Because it kind of quiets that conviction inside you too, right? Because you're like, oh, is the bottom in? Is the bottom in? I don't want to miss out, but what if it goes lower? So you kind of meet in the middle, right? And it takes away some of that conviction, because if you don't make a trade, and mind you, there's nothing wrong with not making a trade. There's nothing wrong with waiting for an asset to come to you, to a value area. But it takes away that FOMO a little bit. Even if you just start a small position and have some on the side, it'll give you the option, if it starts to run, if it makes sense, you can add to your position. If it ends up, coming down, you can add to your position again. And that way, when your asset does move up, you've averaged your way down, and you're going to be at a profit a lot quicker. And if it keeps on going, well, that's a different story. But at the same time, if it's something you see a long-term price appreciation in, there's nothing wrong with averaging in, because sometimes, especially if you're not an experienced trader or you're just not great with technical analysis, calling the bottoms is not going to be easy. It's the same thing with calling the top. That's why I split up my positions when I take profits into, sometimes 3 or 4 different positions. If I was going to take a long here on Bitcoin, perhaps if I was worried about it getting rejected at the top of this channel again, maybe one of my targets, I'll take, half my profit or a third of my profit out, just in case it does retrace back down to test the bottom of the channel. That way I've secured some profit, and now I've got money on the sideline to add back to it at a lower price. There's no wrong way, or there's no wrong strategy if you're making money. Some people hate stop losses. Some people, they won't dollar cost average. And it's whatever works for you. If it's working and you're making money, if you're successful doing it, there's nothing wrong with either strategy. And I use different strategies for different assets and different markets. With crypto, if it's not one of the the major coins that I expect to continue to appreciate over time, usually I'll have my stop, wherever it's going to invalidate my reason for taking the play. And I won't average down. I'll just wait until a new play develops, until I have variables or an edge telling me now is a good time to take a new long position. Because nobody wants to be caught in the middle. If you get dramatic pull downs on any asset, in my opinion, especially if you don't have the time to monitor your trades at all times, I like that, because it keeps my money safe, so that when the asset does find support or begins to curl back up and attempt to make higher highs, now I got my money out and I'm in a position where I can take a new trade, I minimize my loss. And the same strategy I talk about over and over again on the stream is taking trades that have a 3-to-1 reward to risk. If I'm risking, $100, I want to make 300, because that way, if some of these trades get stopped out or some of them fail, if I'm taking 3-to-1 trades, I only got to be right one time out of 3, and I'm making money. And that's important to me, because you could have the best looking chart in the world. The TA could say one thing, and as we all know, sometimes it just doesn't work like that. So if you keep your trades 3-to-1, and even half of them, if half of them go wrong, you're still making profit. And position sizing has a lot to do with that too. I don't like allocating when I'm taking, especially in the crypto market. I like to keep my position sizes relatively the same, because I don't want to overextend it, because that's when you get worried about your trade. If your trade starts to go the wrong way, sometimes you'll get out of it before your stop losses are hit, because you're putting too much on the line. If you keep your position sizes relative to your account size and all the same, I don't care which trade. I don't care if Bitcoin makes me money. I don't care if Ethereum makes me money. If they're all the same allocation, if they're all 3-to-1, I don't care. I can set my trade, I can set my targets, I can set my stop loss, and I can just let it be. And that's another thing with setting multiple targets up, is it takes away some of that conviction. You're like, oh, do I get out now? Do I wait? I might make more money. It might pull back. It really takes that pressure off of you, because if you secure some of your profits, you have the option to add it down, if the asset does make a correction. Or if it does continue up, you might lose a couple bucks if you add back to it higher. But you know what? You played it safe and you stuck to your trade. And it's not about getting every cent out of a trade. It's about making sure you profit. Ultimately, because there's always going to be another trade, there's always going to be another opportunity, and marrying an asset because of the personal feelings and stuff like that doesn't usually work out well in trading. Bitcoin and Ethereum, I mean, anytime people ask me, especially inexperienced traders, what to buy, what's going to moon, what's the next thing that's going to go nuts, I just tell them, with Bitcoin and Ethereum, that's something, at least for now, you just average in. If Bitcoin goes down 10% in a day, great. Add a little bit to the position. Let it do its thing. If it goes up, take a little bit off the top. When it stops going up, like we've seen in this zone historically with Bitcoin, if you take a little bit off the top every time we start, I mean, you see when Bitcoin's gotten up into these levels time and time again, it started to lag a little bit. And there's a couple times where I'm like, no, I'm so convinced it's just going to keep going that you don't take like up here. If you don't take profits and it goes down, and all the profits that you made and some go out the window, it's not a good feeling. And nobody ever went broke from taking profits. So that's my strategy. Again, depending on your conviction with an asset. There's definitely going to be pullbacks coming, man. It's, without a doubt, in any market, you're going to get that. Nothing goes up forever, and not chasing something is the best thing you can do for yourself, because FOMO is real, and FOMO doesn't care if you lose. And most of the time, if you're chasing something and super excited, that's usually the trade that you're getting in late, because when you're super excited, somebody else is also thinking about selling because they're excited that they just profited. And I think our time is up. But again, guys, if you want to follow me on Twitter at Trade Nomadic, I don't mind looking at charts for you guys. I've got a Discord group linked in there too. I post all my charts and trade ideas in there.
Yep, and I just threw the Twitter link in the chat. So if you want to go follow Trading Nomadic over there, just give them a follow. Tweet out what you want them to look at, and we'll get to it.
I appreciate it, guys.
No problem. All right, well, thank you, man.
Thank you. See you next week.
Yeah, of course. Enjoy the rest of your evening.
Thank you.